You've heard the term history repeats itself, and you've probably also noticed how trends always make a comeback, like mom jeans or faded band t-shirts. But when you take these two concepts and put them into the context of the global economy, you might start to pick up on some interesting phenomenons, like the relevance of the 1634 tulip bulb craze to today's society. I know what you're thinking. Tulips. What do flowers have to do with finance? Well, allow me to explain with something closer to home, or closer to the 21st century. Do you own any cryptocurrency like Bitcoin or Ethereum? How about any Dogecoin or NFTs? Well, Bitcoin was introduced in 2009, and the first NFT was made in 2014. We're still very much so figuring out how all these items will play out in the broader financial market over the long term. While many forms of crypto have had their ups and downs, many other related digital assets have blown up and then disappeared. Nobody seems to have any certain grasp on what will come of these in the future. What we do know is that there has been a lot of hype around digital currencies and assets. Similarly, just under 400 years ago in Holland, back when the Dutch were the global force to be reckoned with, there was a lot of hype around tulip bulbs. Just like an NFT, they had no inherent value beyond what investors and the market placed upon them. And also just like an NFT, you could sell one for the cost of a house. But why do people place such value on these types of things? Well, for starters, it's the novelty and rarity factor. Just like the spices being rapidly traded and imported into Europe, making up most of the global economy during the colonial period, tulips were not native to Europe. So when they first showed up, looking like no flower ever seen before, they took society by storm. Only the wealthy could initially get their hands on them, so they became a symbol of wealth, luxury, and status. The rarity and fragility of tulips made them very expensive and also created an entire industry for cultivating the flowers, just like how the demand for crypto and NFTs created an entirely new digital asset industry. Since tulip bulbs that grew from seeds could take a decade to flower, but existing bulbs could flower within a year, the market was driven to value the bulbs at an all-time high. Over the course of a few years, nearly everyone in the population wanted in on the action, because it seemed the value of the tulip bulbs was infinitely increasing. By 1636, the trade was so popular that it made its way onto the Amsterdam Stock Exchange. Professional traders to everyday citizens all were getting wealthy off of the tulip market, and it seemed foolish to not be a part of it. When we hear stories of individuals who capitalized off of stonks or cryptocurrencies going to the moon, we often forget about how many people contributed to make that possible. We also start to overlook the functional practicality of the asset. An asset is defined as something of use or value. And while we may like to think that being deemed of value in the market is useful, many of these assets don't have a tangible use case. When something is valued beyond how useful it actually is, a bubble is created. And just like we've seen time and time again in our economy, a bubble formed in the tulip bulb industry. As it went for our Dutch ancestors, especially the middle and lower class investors, many bought tulip bulbs on margin, essentially taking out debt in the form of a loan or line of credit in order to make the acquisition. It's easy enough when the value of the asset goes up, and you can sell it, pay back the loan, and keep the profit as a difference. The problem, however, is any financial advisor will tell you, is if the asset value goes down, the individual is stuck footing the bill. By 1637, society caught up and realized the tulip craze was just a trend, and very quickly the bubble burst, sending the value of bulbs to an all-time low. Borrowers were forced to sell at whatever price they could get, and then defaulted on their loans or went bankrupt, being unable to pay back what it cost them to acquire the tulip bulbs in the first place. Not too different from the housing crash of 2008, speculative investing got the best of people, relying on the illusion that values would continue to go up and ignoring the reality of the situation. With Tulipmania, the blind hope and greed of a get-rich-quick scheme ended up leaving more individuals broke than wealthy, something we've seen recently in the crypto market as well. If you're enjoying this video, please throw us a sub. It lets us know we're not overvaluing our own content, and it goes a long way with getting this content into the famous algorithm. Also, interestingly enough, the way in which the tulip bulb craze transpired is actually the model for the general cycle of financial bubbles as a whole. As described by Investopedia, the sequence is simple. Investors lose track of expectations, greed, bias, and negligence leads to massive upswing of the asset, positive feedback continues to overinflate prices, eventually investors realize that they're holding an irrationally priced asset, and the collapse in price results in a massive panic and sell-off, which bursts the bubble and sends prices to the ground. Going back to the beginning, this happened with the run on the banks, it happened with the housing market, it happened with NFTs and crypto, and it can happen with stocks as well, just like how it happened to the tulip bulb industry. Sure, we can look back and criticize someone for thinking a flower could ever be considered so valuable, but we've recently done the same thing with JPEG, so only future generations will really be able to judge us. Now, as for the tulip bulb bubble, there's still speculation of how intense it actually was and if it was dramatized. Was this a parable of greed and speculative investing, or one of the largest asset bubbles and crashes in the history of human civilization? We may never truly know. But without a doubt, Tulipmania is as relevant now as it was back in the 17th century. If you enjoyed this video, please throw us a like and leave a comment to let us know what topic you want to see covered next. Thanks for watching.